guys, good morning. Welcome in. EP hanging out with you guys. It is Saturday morning. It's the 7th of March. Thanks for joining the Weekend Warrior Workshop. I want to start things off today, guys. Just first of all, let's do a sound off. Let's make sure everyone's got eyes and ears. Everybody see the welcome screen up on the board and hear my voice. Give me a sound off in the box. For those of you trying to look for the box, that is that little chat room down at the bottom of your toolbar. You guys just give me a sign of life. Just make sure that we are crystal clear. Do appreciate that. So we got a nice crowd here this morning, guys. We have a mixture of people in the room today. Let's make sure that we do have everybody. Okay, guys, everybody, it looks like we have a few people having some audio problems. If you guys can hear me, type in something. Last thing I want to do is start chawing for an hour and realize that nobody's got audio. That would not be a good thing. All right, I think we're good to go. All right, guys, so today's workshop, getting some special attention and sponsorship help from our folks over at Index Futures Group. So I just want to make sure we give them proper credit where credit is due. We've got a lot of new faces in the workshop today. Kind of a blend workshop that we're going to have today because of the people that are here. We've got some new faces and we've got members here as well. So what I've tried to do with this workshop today is, and you guys can see the risk disclosure up on the board, is I've kind of tried to make this like a iTradeLogic 101, giving you guys that are new for the first time seeing this information an understanding of who I am, who iTradeLogic is, and what we do on a daily basis inside of the Logic Center. And then our core focus today, guys, is going to be on the zones, identifying, finding traded zones. All right, so I'm going to do one more check because I do have a couple people giving me a heads up. Joel, Joe, Robert, Sammy, John, Becky, Kelly, can you guys hear me? And the list goes on. All right, fantastic. Appreciate it, guys. Vicky, good morning. How are you? Thanks for making it in. George, how you doing? George, you still plowing out of the snow? You got nothing better to do, right? There's nowhere for you to go. You're stuck in the house. You're going to have to watch this, right? It's good stuff. And by the way, everybody attending today, this is being recorded, so I will get a copy to everybody. So put the pencils down, the pens down, the fingers off the keyboard. Just relax. Be like SpongeBob right now. Soak it all up. Take it all in because there's going to be a lot coming at you, especially for the folks that are seeing this for the first time. And the purpose is for you guys to want to learn. Okay, so after you see what I throw down today, I'm hopeful that you guys are going to want to join me Monday morning inside of the Logic Center where I'll do some live trading and bring everything to fruition that I'm going to teach you guys today. All right, so first and foremost, I don't know, I'm going to probably spend maybe 5-10 minutes just kind of giving you guys the basics, background on me, who am I, what am I about, and then the meat of today is talking about the trading zones and identifying levels, identifying great entry exit spots with our technology. So just a meet and greet on me. For those of you who don't know me, I've been trading, involved in the industry since 1998. Started off as a pesky broker working for a small brokerage firm that quickly grew to be one of the largest, having the largest broker to equity ratios in the business. I've been a portfolio advisor, a system administrator, a hedge fund manager. You get into the CTA, CPO stuff. I've done a lot of different things and worn a lot of different hats throughout the years. But now, no titles, no licensing. I am just like you. I'm a trader and enjoying every bit of it. I've raised millions of dollars for firms for both managed and proprietary trading. I've talked to people that could start an account with $5,000, $50,000, $5 million. So I've talked to everybody, and I talk to everybody the same exact way. I don't care what size account you have. We all have one common thing in common, which is to set out to make money. That's the objective, right? So we all have the same blood when it comes to that. I've executed thousands of trades across hundreds of trading systems. I've seen everything that you can think of: black box, gray box, white box, all sorts of different trading styles, 1 minutes, tick charts, bar charts, hundreds of different indicators. A lot of it, by the way, the black box systems, you never know what those things run on, and that's a little scary. We'll talk about that, the mystification of trading. What the heck am I trading? What am I involved in? In the last 17 years, guys, I've basically traded through some of the biggest rallies and steepest drops that our markets have seen. I remember back in the day when we had, the dot-com bust, the 2008 bust, some of those huge rallies. You think of 9/11. I've been through them all. I've actually had personal funds involved in some of those, and I've had a lot of customers, clients that dealt with some high stress and did rather well through those times. So you can make money obviously going up and down, and at the end of the day, and you'll hear me say this often in the Logic Center, that I don't care where it goes, just go. We just need markets to move. I've studied Keltner, Bollinger, Elliott, stochastic, Fibonacci. I've studied it all. I've done probably the same amount as you guys that have spent money, lots of it. When I have my one-on-one coaching sessions, one of the very first things I do when I lay down a trade plan for my traders is ask them how much they've spent. I got some pretty incredible data that I'd love to share with somebody, on a larger scale, as far as what the average number of dollars spent with the average trader, how much they've lost, how much they've invested. It's pretty unique. It's a pretty interesting set of numbers. 2006 is when I actually made a major shift in my direction. I actually adopted a quantitative analysis technique from a good friend, somebody I actually started to know back when I started in '98. His name is Joe Rios. A lot of you guys that are here today know that I followed Joe for quite a long time, managed a trading room for him for a number of years, adopted his core technology, sprouted some systems of my own from that technology, and the technology that Joe works with is identified as quantitative trading, so quant trading. I started trading live to a global audience in a virtual trading room, and I continue to do that. I actually love that. Keeps me honest, keeps me straight, and I love to teach and preach and share the wealth, so to speak. I've coached and mentored hundreds of traders, and January 1st this year, I started iTradeLogic, and I set this up basically with one goal in mind, which is to provide simple and logical trading decisions for my members. I found through the years, guys, a lot of frustration with people just not understanding the technology. That's the number one thing. If you don't get what you're trading, if you're not having fun with what you're trading, you're going to give it up. And that's just that's actually good for those of you that just can't get it. I mean, why wouldn't you give it up, right? It's like picking up a guitar, picking up a violin, piano. If you just don't get it, if you don't put the lessons in, if you don't put the time and effort in, you're going to give it up. Yet, look at how many greats have come out of it that have actually studied the instrument and have made some beautiful music, right? All right, so enough of me. Let me ask you guys. Let me turn the tables here and find out who I am working with. And obviously, I don't have everyone's mic off. We'd have total, complete chaos in the room. So what I want you guys to do is just take like 30 seconds, read through these. You have, 6 options on the table here. Do me a favor and type in as many of these that describe you. So what I'm going to do with this information, guys, is I'm going to come back through after the webinar. I'm going to go back through and say, okay, George, Sam, Rick, CJ, David, James, Joe. I'm going to go through here and I'm going to say, oh, okay, cool. I know who you guys are, more or less, as a trader. And when we have a conversation, hopefully we have a conversation, I'll have an idea out of the box who you are, and then hopefully we have a little longer conversation, and the relationship starts forming. It's all about relationship building, right? So what I want you guys to do, just read over these and start typing up as many of the letters that identify you. If you're an A, C, E, and F, type those letters. So let's look at these together. Number one, I like finding trades with defined entry points. Is this something that's really important to you? Do you have to have a defined entry point? In other words, I'm getting in at 1282.25. I need to know exactly ahead of time. Or are you somebody that's on the fly that waits for some kind of a setup, and when that setup happens, you're jumping in just for whatever reason? B, I like to identify trade risk and reward up front. Do you need to know that up front? Are you somebody that honestly identifies your risk reward before you start trading? Or again, are you always risking $50? Are you always risking $200? Are you always risking 5 points? Do you actually take the time to identify the specific dollar risk and the specific dollar reward? If that's you, type in B. Or you C, I need help finding price points to scale out of my trade. So for those of you that trade multiple lots, maybe on occasion, maybe every time, do you need help finding price points, specific points where to scale out? Are you somewhere where you put on a 2-lot and you're like, I got $200, or I got 5 ticks. I'll go ahead and take it off here. Are you just kind of going by gut, or are you going by some specific knowledge that you've acquired throughout the months or years that you've been doing this? That's a C. Type that up. D, I don't like to be in the market for more than 5 to 10 minutes. Is that you? Are you somebody that likes to get in, get out, be done? Like a sniper, like a scalper. Type in D if that's you. E, I want to find opportunities to capture big swings without risking additional capital. In other words, I want to go up to the plate, I want to swing for a home run, but I don't want to have to risk anything in addition to do it. In other words, I'm making 200, I'm losing 200. I'm making 300, I'm losing 300. I want to go try to make $1,000 in this next trade, but I don't want to lose more than 200 or 300. Is that you? You think that's possible? Type in E. And then the last one, F, I desire to set times in my daily e-calendar, whatever kind of calendar you have, Google, Yahoo, Outlook, whatever kind of calendar that you have on your smartphone or on your desktop, laptop. Would it be nice for you to be able to go in? Do you enjoy going in and setting a specific time when to start trading crude oil, S&P, gold, euro, and you get a pop-up alert? If that's you, type in F. If you desire for any of these, go ahead and type up the ones that you desire. So either you're doing it now or you desire. Go ahead and type up the number of letters. Just type them all up, put them on a string, and just send it to me now. Now, while you guys are doing that, the reason why I ask and the reason why I lay this out is after what you guys learned today, my techniques are all of these. So any of these desires on the board that you see that you want, you're going to get. Simple and short. And I appreciate that. Thanks for the thanks for the feedback, guys. All right, so today we are here to find the zone, find your zone. Do you know how to identify a bull and bear zone? Some of you might actually have a different interpretation of that. Do you know when to buy in the bull zone and when to sell in the bear zone? Do you have a clear understanding, okay, this market looks bullish, when do I start to buy it? If you struggle with that, you are in the right place. And the last one, do you know how to identify high and low probability type trades? Just because it walks like a duck and looks like a duck, that duck might be getting ready to give you a duck, right? You got to be careful. You have to be able to identify, hey, is this a high risk, low risk? High probability, low probability. We're going to talk about that today with the technology I present to you. Guys, here's my playground. People ask me, what do you do? Are you a quant trader? Are you a scalper? Are you, what kind of a trader are you? I'm a global trader. I mean, guys, this is my playground. I trade all of these markets. Actually, let me rephrase. I scope out each one of these markets on a daily basis. I do this with the crowd, with my members. We spend about 20 30 minutes of the first half hour that we're together, 20 to 30 minutes, and we take a look to see what the indices look like. We look at what the treasuries, we look at the metals, we look at the energies, we look at the currencies, the grains, and the good old mighty dollar. Seems like everything goes against the dollar. If you guys were looking at the net change yesterday, everything was in the red yesterday, and the dollar, straight up. So I do a scan about every half an hour when I'm trading, and I'm looking to see the relationship, because it's very important for you guys to understand that there is a string attached to these guys. Okay? There's a string attached. It's almost like, I guess you could call it dominoes. You could just call it what it is, a core relationship. It's a correlation. There's a string from the energies to the stocks. There's a string from the metals to the treasuries. Not really a string for the grains. You know, just because the unemployment number comes out and employment ticks down 2 ticks to 5.5%, that's not going to affect soybeans. Now, there are purchase manager index, there are grain trades, grain numbers, there are some economic numbers that come out that will affect the grains, but nothing significant when you see the yen starting to take a nosedive like it did yesterday. Does that mean that the wheat's going to take a nosedive too? Not necessarily. So the grains kind of stand alone. But everything else has a relationship. There's a string attached to these. And you guys are going to learn in my trading course. And let me just lay it out for you right now. Just about every weekend, we have a Weekend Warrior workshop like this one today. And we learn. I teach you guys correlation analysis, money management, trailing stop rules. We talk about the zones. We talk about the levels. We talk about the multiple strategies that I work with on a daily basis inside the room. So if somebody said, hey, EP, what are you going to trade on Monday? Guys, I have no idea. I don't know what I'm going to trade on Monday until I actually go in and do my scan. I'm not going to tell you right now that, hey, Monday we're going to trade gold. I have no idea until I actually show up, roll up the sleeves, and in about 1 minute, I can look at about 3 things, 4 things, and be able to tell you in about 1 minute, right before the race starts, what I will trade. And it's a matter of me stacking the odds in my favor, and I'll teach you guys that here today. So here are the 3 trading styles before I get into the zones, guys. Just again, I told you this is going to be a little bit of a blend of who am I, what do we do, and let's get to the meat. We're almost to the meat, guys, almost there. The trading styles that I have in the Logic Center, guys, involve swing trading, timing, and scalping. So remember those questions I asked earlier? Well, there's one common thread that all of these have in common. One common thread that all 3 of these styles have. And that is, think about the transparency that I'm going to share with you guys. Behind my trading, behind the charts, behind the style, there's going to be these levels that you're going to see up on the screen. Let's go ahead and just bring them up now so I can share with you guys just exactly what I'm talking about. So I'm going to pop up on the screen this chart here. Let me get rid of my drawings. All right, everybody good on that? Everybody see a black, a chart with black in the background? Jeff, you good on that? Guys, give me a sound off, making sure you guys are live, make sure everyone's good. James, quality good? Rick, you good? Martha, you good? All right. Make sure everyone's doing good here. What we got here is an after screen. I say after because I need to teach you guys and explain to you guys just exactly what it is you're looking at. See, here's the analysis of what you guys are looking at. We've got, I'm actually trying to find a before. There it is. There's an explanation. That's an explanation of what you're looking at. Okay, the levels are the core. These are going to be in the background of everything that I do. Now I'm going to come back to this slide, guys, so just bear with me. I'll show you the method of my madness. Okay? When you come into the Logic Center, you're going to see this. Now this is 3 charts, and this actually represents 3 different styles. Over here, I've got a 1-minute chart. And if you haven't guessed it by now, these are Bollinger Bands. Okay? And that red thing in the middle is a moving average. This over here is my scalp. And I call this turbo. Turbo scalp. I'm looking for trades that last about 1 minute in length. Now forget about that because that's a workshop all in its own. But I want you to identify what's in the background. What's in the background on that left chart? Levels. Green levels, yellow levels, red levels. Now some of you are sitting here going, oh yeah, support resistance. Yes, but not exactly. And seeing is believing, and when you actually come into the Logic Center, it won't take more than 1 or 2 sessions for you to go, wow. These levels are pretty darn amazing, how they pick. In fact, this is a great example. Take a look at this. This is the, what is this? This is the S&P? No, this is the Russell. Look at this. Market's going right up and doing these tests. Look at that. Right there, a test. Right there, a test. Right there, a test. Right there, a test, and then a break. Okay? In the middle, this is what I had up on the screen earlier. This is a methodology I use called channels. I look for channel breakouts. Areas to buy, areas to sell. What's in the background? Levels. Zones. This is a bull zone. This is a bear zone. Now I'm going to break this down, guys. I'm just kind of throwing it at you real quick, and then I'll bring it all together. And then over on the far right, I use a timing method with a tool that I have called the Trader's Clock. And I actually go in here and I look for trades that set up based off of time. This is one of the tools available at my website for our members, where I'll go in and say, okay, in fact, we did this yesterday. Let's take the Russell. The Russell over the last, let's take the last 5 days based on time frame. What has been the trend the last 5 days in the Russell? Well, according to this little widget, which is a dandy, there has been an average of about $396 made over the last 5 days. Now, you got 2 of those days that were epic. And you do have some consistency there between 9:45 and 10:45. So this is, again, another tool for another method for those that like timing trades. You guys remember when I talked about putting a calendar alert to say, hey, Jim, get ready to buy the Russell starting at 9:45. You would set that alert with a 15-minute reminder, come to the screen and get ready to do what? Get ready, if it's blue, to buy, and if it's red, get ready to sell. But it depends on 3 things. Location, location, location. Are we in a bull? Are we in a bear? All right? Very, very important for you guys to understand. So we're going to go through this today. Oops, didn't mean to open that up. So we're going to go through this today, and I'm going to break down the logic, and I'm going to start by opening up a chart, and I'm going to strip it down. Start from scratch. Say hello to my little friends. Say goodbye to my little friends. All right. So, guys, this is what the S&P looks like naked. Now, I just chose the S&P. It doesn't matter what chart we take, but I'm just going to use the S&P for right now. Now, this line over here, let me get a marker here. This line over here is the midnight, okay? Now, we're talking right now about levels. We're talking about levels and zones and we're trying to unlock the logic and discover trading zones, right? So that's happening right now before your eyes. This is just a blank canvas. And this red line over here tells me that, hey, something's going to happen at midnight. And I'll tell you what's going to happen. We're going to have our levels adjust one time and one time only in a 24-hour period. And that's at midnight. Everybody that follows me has their computer set to Eastern Time, regardless of where you live. Okay? I don't care if you live in Australia, Wyoming, Canada, New Zealand. You're going to have your clock set to Eastern Time, New York, whatever your clock, your computer says. Change it to be local to New York. There's a reason for that. Number one, we want everybody's levels to switch at the same time so we can all identify having our charts all be the same regardless of where you are around the planet. Now, you guys know that for the most part, markets are open for 25 and a half days, right? 24/7, 25 and a half days. They open up Sunday evening and they close down Friday afternoon, right? Okay, so if and when you get set up with the trial with Eric over at Index Futures Group. By the way, let's just talk technology real quick. The platform that I'm working with is called the Trade Launcher. Okay? Now, some of you guys, what kind of platforms do you guys have right now? Sound off. What do you guys have? What do you guys actually use right now as far as a trading platform? NinjaTrader, TradeStation, something else? I know there's a lot of Ninja Traders out there. Nothing wrong with NinjaTrader until they actually changed into being a brokerage firm and kind of killed it for a lot of the independents, but that's just my opinion. By the way, I'm very opinionated. If you guys haven't figured that out, you'll figure that out real quick. All right, so for those of you guys that don't have a platform, just a little heads up, you guys can gain access to a platform at my website. Okay, so I'm just going to throw that out there real quick, iTradeLogic.com. And you'll see when the carousel comes up at the, come on, there we go. When the carousel comes up, right there, that box, if you click Trade Launcher, you click Read More, right inside the box there, you can click right there. Let me make sure I circle it, and you can get a trial going. Costs you nothing. All right. Eric Robinson is a broker there. Eric's been with me for, gosh, I guess going back to like, I don't know, 12, 14 years, 15 years now maybe. So Eric will dial you in. When it comes to your broker, your brokerage firm, guys, it's really about trust. Who do you trust? And are they quality in what they do and what they provide? And the guys over at Index Futures Group definitely meet all those check boxes. So just want to throw that out there. Anybody that wants to get a trial going, I'll remind you guys again by the end of this gig, it's available at the website, iTradeLogic.com. All right, so we got our chart. Now, what are we going to do with it? We're going to dress it up. I told you guys about the levels. I'm going to add the first one, and here they come. They're coming right at you. Okay? Now, they're a little dull, so if you guys don't mind, I'm going to actually go to my preset template, and I'm going to make them a little brighter. There we go. All right. Now, I have just dressed up the S&P and made a heck of a lot more sense out of it. I've put some levels on here that, like I said, are similar to your standard support resistance, but these levels were designed that we're not going to just give you one level of resistance. We're going to give you 3 levels of resistance. And the one at the very top is critical resistance. And you can guess, as I showed you earlier, that this is critical support. But what's really unique is that I can identify when we are in the bull zone, when I should be buying, and when we're in the bear zone, when I should be thinking about selling. Okay, now there's more to it. You don't just say, oh, hey, market's starting to go up and we buy, or, oh, hey, right here, it just dipped into the bear zone, we sell. No, not at all. But I want you to think about something here for a second. Remember that slide I showed you guys earlier that had all the markets on it? This one here? Guys, any one of these markets plus any currency market, any individual stock, any ETF, FX, futures, any market on the planet that has a heartbeat and has liquidity. Think about what I'm showcasing right now. I'm giving you guys something that you can trade with the levels in the background. Throw your market up on this grid. The algorithm, the actual core logistics work the same for every single market. Now, you can see what's happening over here at midnight. The bull-bear level yesterday was up there. It shifted down for the next day. Here's where the bull-bear levels are now. The critical support, it moved down too. So this happens once a day at midnight. Okay? Now, I'm going to add something else to the screen. And they're coming at you here. I'm going to throw on here. Remember what I talked about earlier about looking for the opportunity to measure your risk and your reward? Well, you can do that. This indicator is the R3, risk-reward ratio. The green is representing reward. And the red is representing, you guys guessed it, risk. And right in the middle is a ratio number that is produced. Okay, you can't see it because there's a green box over the yellow, which actually tells me what the ratio is. Now, I don't know about you guys, but anytime I'm going to go buy something, I don't care if it's like at a flea market or if I'm on Craigslist or I'm going to go buy a new car or I'm going to go buy, you can throw anything in there, a house, something for your kids. Don't you want to try to get a bargain? Don't you want to say, well, let's see, how much is this going to cost me? What's the risk in me buying this? Let's take a property. Property value is probably great. I'm going to go buy, I don't know, I'm going to go invest in a condo. What's that going to cost me? Where is it? What's the location? How far down can the market dive? Can I take a hit on this property? Can I double what my risk is? Is it going to cost me, I don't know, I'm in Southern California, a condo, pretty ridiculous what a condo costs here. Any property anywhere in the States for that matter. Let's just say it's $300,000, the investment. Can I make 600? Can I double my return? I don't know about that. Now you might actually lose $100,000 on the investment. So if I'm going to lose $100,000 in 5 years from now, well, can I at least go in and have the opportunity to double what the risk is? Can I make $200,000 on the investment? Well, that same attitude needs to be done with your trading. So you guys, money management is a core component to trading that a lot of people skip over. You guys go to your universities and your schools of trading, and they talk about a lot of different indicators. But what they skip out on is what a lot of colleges across the land skip out on, which is how do I make money? Talk to me about money management. Break it down. What's the risk on each individual trade? And by the way, all of you guys in this room today, you're all different. You guys all have different shapes and sizes of accounts. Remember when I said earlier that I work with $5,000 people and $50,000 people and $500,000? I talk to you guys all the same. but we're going to mix it up in terms of how many units, how many contracts you can trade, what markets you should be trading, how often, the frequency. These are things that have to be adjusted. Now we're going to go to yesterday's trading session, and it's crazy because yesterday was a crazy trading session. Look at this. Look at your stock market yesterday, guys. Now, if you don't have these levels, you don't realize how much of a mother sell-off we had yesterday. Now, I'm going to pop up that chart earlier and identify real quick, and then we'll go back to that S&P from yesterday. Now, Gnostic is the actual term, the true terminology that Joe Rios has called these levels. So he calls these levels Gnostic. G is silent. GNOS comes from a Greek word gnosis, which means knowledge. So it's Gnos, and then tick is a value that we obviously use in trading. Do you need to know that? No. I will refer to them as levels. Once in a while in the Logic Center, I will refer to them as Gnostic levels. Some of you that are here that have already taken Joe's classes, a lot of people will invest in Joe's technology, and then they follow me because they like my style and the additional things that I do. Okay? So Joe and I are good friends. Joe still sells his technology. I make it available as a lease or a rent-a-vet, if you will. If you're somebody that wants to kind of just like try before you buy, then I'm your ticket. Okay? The levels and really the zones is what I want you guys to identify. So, bull zone. Okay? Look. Green level here. This is where the bull level starts. This is where the bear level starts. This is the bear zone 1. There's 2 buying zones and there's 2 selling zones. The first buying zone or purchasing happens when we start to come up here. Now, there's other things we have to take into consideration. By the way, remember how I told you how good they are? Look at that. And by the way, guys, this was 325. Okay, yeah, this was last March. Wait. No, this was last year. This is, how funny is that? Here it is, the 7th of March, 2015. I created this back last year. They're still working as good as they were in 2006 for me as they do today. Bull zone 1, and if the market goes up here, bull zone 2. Now you guys can use some logic and identify that the higher we go, the least likely the probability goes down, right? Not supposed to be buying high, it's supposed to be buying low. Sell high, buy low, sell high. So bull zone 2 trades are going to have a higher percentage of risk. Okay? Higher percentage of risk up here. Now, if I'm working with someone who's got a $5,000 to $10,000 account, and I want them to be conservative, hear my words. If you're a smaller sized trading account, and you have to really be conservative, I get that. Guess what? You're not going to be taking trades down here. So it's real simple. EP set me up with a basket. I've got 3 markets in that basket. And every time I come to the marketplace to look, if the market is trading in these areas or below critical support or below above critical resistance, you're not trading that day. Has anybody told you that? Does anybody have the gonads to step up and say, hey, you just spent all of this money and you gave me all this money to give you tools and rules, but did they tell you where not to trade? Did they talk about money management? I know for a fact a lot of guys out there don't, because I sit in their rooms and I have a lot of traders tell me what they like about me and what they like about my style. I get it, guys. Remember all the hats I've worn. I get what you have not had, and I get what you do need. That's the rewarding part of what I do. Aside from trading, the reward is helping people become successful and finding the light to turn on. All right, so enough of that. We got the bull, we got the bear. By the way, in the middle, that's a neutral trading zone. That means when the market's in there, push pause. Wait for the market to break out. Wait for the market to break down. Trailing stop rules, I will teach those to you. Entry rules, I will teach that to you. exit rules. I will teach that to you. Now, the S&P yesterday, insane. Absolutely insane what it did yesterday. Treasury notes yesterday, insane. Treasury notes yesterday with the unemployment went straight up to critical resistance, and they came straight down and plummeted treasuries in a heartbeat. Now, the S&P yesterday, okay, this was, just make sure everybody sees that this was yesterday. There you go. See, I think I have to push down to, there you go. March 6th at 8:35. This is right after the unemployment number came out. 295,000 jobs were added to the economy last month, but the unemployment number ticked down 2 ticks to 5.5. You're thinking, hey, fantastic, happy days are here. Now, if you think that I'm going to sit there in the trading room and analyze numbers as they come out and make my decisions as the numbers come out from our reports, wrong. There are a number of days, guys, where I will fail. Actually, that's not the right word. I will forget to tell the traders, hey, guys, the number was 5.5. You want to know why I forget? Because I don't care. I just know that there's going to be an announcement. I know that there's going to be some kind of fundamental, and we prepare for it as technical traders. Okay? Now, the market yesterday, I can tell you guys between 8 o'clock, and if there's something that you write down, it's going to be what I'm going to tell you right now. 8 to 11. 8 to 11 is what I call prime time. There are 3 major prime time sessions in a 24-hour period. So a little free piece of information that I've been giving out for years. It was taught to me. I teach it to you. 8 to 11. And by the way, all times I reference, guys, are Eastern. 8 to 11. 2 to 4 in the afternoon, and 2 to 5 in the morning. 2 to 5 is back over here in the London session. Now, it depends on what you're trading. In other words, there's certain markets that do better in the 8 to 11. There's certain markets that do better during the 2 to 5, and there's certain markets that you don't even think about touching in the 2 to 4, and that you got to make certain that you trade between 2 to 4. Okay, so 3 different prime times. The S&P, I can look at any market. I'm looking at the S&P with you guys. I can tell you that the S&P yesterday went bullish for 5, 10, 15, 25, 35. For 35 minutes, the S&P was bullish. And then it was bearish the whole entire day from 9 o'clock forward. And I can tell you that there was a critical support break at 11 o'clock. Now think about that. If I had you on the phone, and it's the very first conversation we had, and it sounded something like this. Hey, Robert, how you doing? Nice to have you on the phone today. Hi, Sammy, how you doing? Nice to have you on the phone today. Hey, listen, I understand you're looking for some help with your trading. Did you trade the S&P yesterday? Oh, you did. How'd you do? Oh, you got clobbered, huh? Really? Yeah, what time did you buy it? Oh, you bought it. You bought it at 9 o'clock, did you? Okay. What else did you do? Oh, you bought it again at 11 o'clock. Why were you doing that? Oh, you were trying to buy the bottom? You thought it was going to turn? Yeah, okay. Well, did you actually understand that you were buying in the bear zone? Did you understand that you were buying at 11 o'clock at a critical support level? You didn't know that? Well, I can help you with that. If you put these levels down, it's going to help you identify that you have a low percentage buying down here. You're betting against the whole world. Low. It's supposed to be a low percentage. Okay? You have a better opportunity of buying when you're getting ready to cross over that prime time, 8 o'clock, and you have a better idea of selling when you're getting ready to enter the bear zone. higher risk entering the bear zone here, and the highest risk. Guys, I don't care how far down it went yesterday. We do not sell once the market enters a critical. Stop looking. Stop looking for shorts here. Stop looking for shorts here. I know this was a gigantic sell-off. I got no problem telling you guys that 9 out of 10 times the market will do this. And then 1 out of 10, big sell-off like yesterday. Now, imagine, hypothetically speaking, of course, what you could have done with this little bit of information if you identify, well, I'm going to start selling if I have another 2, 3, 4, 5 things that add up to the list of logic, which I'm about to share with you. Imagine what you could have done in the S&P around 830. Market started selling off, let's just call it 2098. And by the time that the closing bell came about, the market was at 614. Let's see, 2, 3, 4. Here's the closing bell, right? Let's just call it 2070. That's 20 points roughly. It's actually more than that. It's 30. It's roughly 30 points, basis points. Okay? It's $50 a basis point in the S&P. Do the math. It's a $1,500 move, right? Now, am I going to sit here and say, yeah, guys, you all should have made $1,500 yesterday. You could have traded a one lot. Margin requirement, $500. You go to, oh, man, you could have, a 300% return. Come on. Come on. No. Guys, I want you to all get this and get the heck out and be done. That's an hour trade that picked up 10 points. 10 points is $500. That's what I want you guys to make. Are these easy to catch? No. Sometimes they're very easy. Sometimes they're like, wow, smack dab in front of our face. Other times it's like, well, we're going to have to work for it to find it. Now, I told you guys I was going to share with you the list of logic. So let's go back over here now. We'll come back to this chart later. Let me go back to my PowerPoint. Talked about the 3 different styles. Trading technology, simple goal, making smart logical choices to help increase the odds towards success. Today, I'm talking to you guys about what's in the toolbox, levels. Talked about the risk-reward ratio. I haven't talked to you guys yet about channels and accelerators. You guys remember that question I asked earlier about would it be nice to have something that would help you with specific entry points? That's where those are going to come in. Talk about that in just a minute. Here's the concept I want you guys to all grasp. What the heck are we looking at? Are you in control? I use a lot of different analogies. I'm a huge race car fan, huge race car fan of F1, any racing. F1, NASCAR, jet skiing. I'm an avid outdoor race enthusiast, and I'm in Southern California. If you guys are familiar with Fontana, no, that's not where I live. And by the way, we call it Fontucky. It's in Southern California. It's out in the Imperial Valley. It's off the 15 freeway. If you're in LA headed to Vegas, you can't miss it. Anyways, it's a great racetrack. It's Penske's got his name there, and he does all his testing there. And it's a great place to catch the Napa 500. It's equivalent to the size of like Michigan. It's huge. So enough of that. What am I looking at here? I'm looking at, is this Greek to some of you guys? If you're looking at this for the first time and I said to you, hey, hop in. There you go. Knock yourself out. Take it for a drive. I would be crazy to think that you guys could take that 2-week trial, get set up with Eric. Eric sets you up with the trade launcher, and you just follow me in the trade room. Are you kidding me? You know how many people do that, though? You know how many people go, hey, it's free. Hey, EP's giving me a 2-week trial. I'm just going to follow him. I'm just going to, you know what? And then, he goes away, and I'll just continue to do this. Do you really think you're going to be able to identify what the heck that is and what this is and when you turn that on and when you turn this on and when you hit that button and you have to keep your eyes on the the readout? You guys think that racing is easy? You know how many people make fun of racers? Oh, they just go in a circle for 500 laps. No, man, it is so much more than that. And it's not until you actually recognize what they have to deal with. This is their control center. You guys have a control center, okay? My control center looks like that. There's some other components, but that's a big part of it. So here is what it looks like when it's not on a chart. This is my list of logic. Now, there are a number of workshops within this list. The first thing is location, and I've given you guys that today. I buy in the bull, I sell in the bear. I need to identify the location. Which zone are we in? That information you guys now have. I study risk on, risk off. What is that? A lot of you guys are saying, well, I hear the guys on CNBC and Fox Money and Bloomberg, Reuters. I hear them talk about, it's a risk on market. But what exactly does that mean? Guys, this is my on-off switch to the controls that I showed you earlier on the steering wheel. If you don't know this component, if you don't know where that button is, you are in a heap of trouble. And once you learn it, it's like the puzzle coming together. Now, remember, I told you that I've been trading since 1998, adopted Joe's principles in 2006. Man, you talk about, anybody been to the Luxor in Vegas? You know that big beam of light at the top of the pyramid? Yeah, I felt like my face fell right on top of that, and it was just flashing right in front of my face. Amazing. Amazing if you understand that concept. And by the way, the concept that we use to identify risk on, risk off is by looking at two charts. But not just any charts. They're charts that have levels. Okay? It is a template that we throw down on any market. And for identifying risk on, risk off, it's two markets. That is a workshop all in itself. Not teaching that to you guys here today. Leaders and laggards. You have to identify what a leader is and what a laggard is. I'll show you how I do it. Imminent reports. I told you guys about the unemployment number that came out yesterday, natural gas report on Thursday, crude oil on Wednesday, GDP, FOMC. You need to know if there are reports that are imminent. What's coming out? That's one of the very first things that we do from 9 to 9:30. I open up my trade room at 9 o'clock, and from 9 to 9:30, do you know what I'm doing? I'm doing a scan analysis with all the traders in the room. We're taking our time. We're chilling. We're just, well, it's me. I'm the one talking. But I'm just talking. Guys are throwing me ideas in the chat box. I'm taking my time. There's no rush to get into the market. 9:30 is when the stock market opens up. Now, you guys remember how I told you from 8 to 11 is the core prime time, 8 to 11? Well, right in the heart is when I open up my trade room from 9 and I go until 10:30. I like to refer to the Logic Center as the best 90 minutes on the planet. Why 90 minutes? Why don't I start at 8? Why don't I start at 7? Why don't I go to 12? Guys, I've done it all. I've traded for 6 hours. I've traded for 3 hours. I've traded for 1 hour. I like 90 minutes because my objective is to get in and get out. Stack the odds as high as I can and find as many of these things as I can that are stacked up before I put the trade on. Location, risk on, risk off, what's leading, what's lagging, what reports do we have coming out, what is going on in the headlines. In other words, where is the hype? Is crude oil testing new highs, new lows? Is gold going to 1100, going to 1400? What's it done in the London session? If I'm trading the London session, what did gold do in the Asian session? Prime time. You guys now know that one. Think about it. You guys now know to a great degree, the two that are circled. You guys can figure out when markets open and close, even though the pits are not are nowhere like electronic sessions. The electronic session is king. We all know that now. But you still want to know when the pits open and close in New York and in Chicago. So identify opening and closing times for the pits, because there is volume that kicks up a notch. For example, the New York Mercantile Exchange opens up at 9, and there is significant volume that can come in that can help you find new trades or get out of trades if you've been trading from the earlier hours in the morning. And then L2L, look to the left. Look to the left. I go back to this chart. If I'm thinking about selling this market, well, go look to the left and see where that market has been in the London or in the earlier session. Let me squeeze this. Is there a possibility of this market dropping? I like to look at the last 24 hours to make that decision. You can see in the previous day a test and a significant break. Duh, right? Logic, guys. I will look at when I'm using the channel strategy, which I'm about to showcase, I like to work with 5 and 30-minute time frames. Now, the channel strategy I'm talking about is right, well, you know what? I'll actually just use this chart. I've talked about levels. I've talked about the risk-reward ratio at the bottom. Something else you're going to see on the screen, a 5. There's a 5. There's a 3, and you can't see it because it's purple, a 1. These are accelerators. 5s, 3s, and 1s. The 5 tells me that the market is at its fullest momentum at its fullest capacity of having momentum. Momentum is in play. A 3 will come about and tell me that that market is oversold if we're in the bear. By the way, the accelerators will exist above the bars or candles when you're in the bear zone, and they will exist below the bars and candles when you're in the bull zone. A 1 accelerator tells me that the momentum is shifting and imminent change is coming. I don't know exactly when. I don't exactly know how much, but the trend is breaking into the other direction. Here comes a 5 again. There's a 1. Market's moving up. Momentum is dying. Oh, momentum is grand again. 3s, it's oversold. Do I use these solely as entries and exits? The answer is no. They are a crutch. They are a cheerleader. They're telling me that there's a great chance of a breakdown. They're telling me there's a chance of a change. That's it. It's a crutch. The last indicator I'm going to talk about today in detail is the channel. Now, the channel, remember when I asked you guys earlier if you like to have precision entry points? Well, I give you precision entry points. This is helping me identify exactly where there is a breakdown or a breakout. Look at this. Let me stretch this out. This is the same market we've been talking about, guys. It's the S&P. And you can see the bull-bear level in green. Here's your bull. Here's your bear. 7 o'clock, 7:30. Look at this, 8 o'clock. Hello. Hello, 8 o'clock. Can you say breakout? Can you say precision entry point in the bull zone? You know you're in the bull. You know it's the beginning of prime time. Hello? That was a 5-minute run from 21 up to 23. That's about $150 per unit. And by the way, can you tell me where the market went? I know it didn't happen on the first 5 minutes, but look at the test. That's what I call a kiss, a Gnostic kiss. And then there's the breakdown. Actually, that one right there is the breakdown. that you'd want. And we'll talk about why. I'm not going to go into details on the channels, guys. The channels are a workshop all in their own. I talk about channel strategies. I talk about breakout, breakdown, swing, timing. And for those of you that like to trade on smaller time frames, scalping. I got a little flavor for everybody that we pack into 90 minutes. And by the way, tell me how good these levels are, guys. Now, do you guys notice the color change on the bars? You guys can probably guess what that means. That's the Navigator. Joe designed the Navigator, I'm going to say about 3 or 4 years ago, I want to say. Epic indicator. Yellow, consolidation. Blue, momentum to buy. Purple, pink, whatever you want to call it, momentum to sell. Blue is strength, pink is a weakness, yellow, consolidation. Do I just wait for the market to turn from yellow to blue to buy? No. We add up as many things as we can in our favor. It's the watch this, guys. Let's get that list back up here. List of logic. Let me squeeze this down. Move this over here to the left for now. Thank you. Okay. Think about how many things I have in my favor. The location. We're at the bull. Risk on, risk off, I'm not going to talk about today. Was the S&P a leader? I don't know. I can't go back and tell you right now if the S&P was a leader. I will share with you that it was becoming a leader, but right now I can't tell you. So this one I'm not going to talk about. Leaders and laggards I'm not going to talk about today. Were there any reports? Yeah, there was a report coming at 8:30. That's enough reason to start looking for an opportunity to buy or sell. Two things in my favor. Headlines. What's going on in the stock market yesterday? There was lots of headlines based on the reports. Prime time. It's the beginning of prime time. Opening and closing at 8 o'clock. There was nothing opening at 8 o'clock. You didn't have the stock market opening up until 9:30. Shows you that you don't have to wait for the stock market to open to get involved in trades. And then looking to the left, I've already told you that there were some grand opportunities. 1, 2, 3, 4, 5 out of 8 that I'm sharing with you right now on a Saturday morning. We could have had 1 or 2 more. I just can't tell you. It's not that I don't want to tell you. I just can't tell you unless we have a live market. So let's just, for the benefit of the doubt, say that there were 6. 6 out of 8 things stacked in my favor. The technology is helping me identify an entry point. We're in the bull zone. The channel is helping me identify that there's a break point. I can measure the risk to get an understanding. By the way, logic would tell me to put the stop below the opposite bias level, and logic would tell me to go after multiple targets as we move up. That's something that I'll teach you. Where to scale out. Remember we talked about that? I'll teach that to you. So here's the story, guys. I want you guys to all run a clean race. I want you guys to treat your cash like racers treat their cars. You ever see guys before they race? They're polishing the car, making it all nice and shiny. They got the new tires on. They're cleaning. Well, this one doesn't have a windshield, but they got everything all nice, spick and span. It's looking beautiful. It's on the paddock. It's your car. It's your cash. You got a tight grip around it. You don't want to ruin this thing. Well, your trading needs to be the same way. But wait, before we put the car on the track, before you guys get out there and take your hard-earned money and put it in the marketplace, ask yourself, are you ready to take this car on the track? Are you really prepared? Do you really know what you're doing? Do you really know how to drive this thing? Guys, I can't tell you how many people I talk to. They know what they're doing wrong. They know they have no control. Here's the problem with a lot of you guys. You don't have anybody to tell you that you're doing it wrong. You don't have anybody to take the wheel out of your hands. And you probably have a day that looks like this. Has anybody had one of these days in the last 30 days? Be honest. Type in me if you've felt like that with your trading in the last 30 days. Maybe it's been the last 30 days. Maybe it's been one of the last couple of weeks. Anybody subscribe to that? Those of you that aren't answering me, you're lying. That's all right. Guys, here's the goal. Levels and logic basics. What I'm going to be doing with you guys in the training, what I can do with you guys on a one-on-one basis, for those of you that want the coaching, we're going to be identifying bull and bear zones every day in the Logic Center. I trade from 9 to 10:30, and you guys watch me identify bull and bear zones. We'll be showing you guys how the levels work. We've done that today, more or less. Basic features we've seen today. Strategy techniques. Now, the strategy techniques that I work with, I have multiple techniques. Okay? I talked about that earlier. I've got swinging, scalping, channel breakdowns. Do you know how to identify your bull and bear zone? I've taught that to you today. You guys should now know how to identify a bull and bear zone if you have the technology. 2-week trial. You guys will have everything I've showcased today. Do you know when to buy in a bull? Remember the channels I gave you? The list of logic I gave you? That's going to help you understand when to buy, when to sell. Remember the higher zones and the lower zones? Well, high and low probability. Again, having this technology will help you find the answers to where the trade risk is high, where the probability is high, or where the trade risk, not so much in dollars, but the trade risk, the risk on the trade is not as high. In dollars, it might be the same whether you buy in the first zone or the second zone, but at least you can add up the probabilities. Here's where I want you guys to be. This is your next step. Simulation. Here's the beautiful thing, and it's a great analogy. You can get into a simulator. You can follow me in the simulator. We can train together mano y mano, or mano y womano. And you can also get your training while you're inside of a workshop or inside of the Logic Center in the live trading room. Now, I'm not going to be able to sit there and take your hand in the Logic Center because I'm trading. I'm not in a simulator. I'm trading real dough. So we got to be careful. And I try not to deviate from the core, which is to stay focused and keep the car on the road and keep it from looking like that, right? That's the goal. So let's talk about trying before you buy. Try before you buy. Logic Center is open from 9 to 10:30 every Monday through Friday. I have the Weekend Warrior workshops. Spend about an hour, 60 to 90 minutes talking about market correlation. Risk on, risk off. Detailed strategies for the zones. Detailed strategies for the channels. I also have details and breakdowns on the strategy for those of you guys like to scalp. Turbo Scalp is a workshop all in its own. This far left chart. This is a 1-minute chart for those of you that like shorter time frames. I'll teach you how we do trades that last anywhere on average between 5 to 7 minutes with bands and moving averages on 1-minute charts. I come in, I identify the sentiment, I set up a swing trade or two if the logic stacks up. I prep the trader's clock. Remember the trader's clock I talked about earlier? I prep timing trades. And then I turn on the Turbo Scalp. On average, we'll have between 3 to 5 trades in a 90-minute session. My best trading days, guys, is when we only have 1 or 2 and we meet our objective, and then I'm just calling out trades for those that didn't take the first or second trade. But I'm done. I'll announce when I'm done, when I hit my goal. And it's like catching those big swing trades. When this happened this last week, we had some nice trades, swing trades in Russell, wheat, not gold. Gold was actually tough finding the swing trade. Struggled a little bit with the scalp this week. But again, going back to what I will trade, what is made up of my portfolio, I can't tell you what it's going to be on Monday. But I can tell you this, I'll do the scan the same way I do each and every day, going through, looking at the list of logic. And then, of course, looking at the location of where the market is and identifying where the probability is high and where the probability is low. So, talking about next steps. Limited offer. What I'm doing with the folks that showed up here live, so those of you watching the recording, you can contact me directly, but I'm making this offer for the folks that are actually here on a Saturday morning giving up their time. I do appreciate it. If you register for a 2-week trial, you're going to receive an additional complimentary webinar. Webinars, for the most part, 90% of them are closed to the public. They're only for members. So I will offer you an additional complimentary webinar if you just sign up for a trial. How do you sign up for a trial? Well, that's easy, easy, easy. All you have to do is go over to the website, iTradeLogic.com, and you got to click on the box that says Index. Okay? Index right there. If you do that, you're going to get signed up for the Trade Launcher. Now, if you already have a trading platform, then I might be able to dial you in with some indicators. But I want you to do the Trade Launcher for 2 reasons. 1, it's a free platform. And 2, it's the platform that I use. So when you're watching me in the trading room, we are on the same page. I've used multiple platforms, and I always find that those people that don't have mine, if I'm working with TradeStation, all the NinjaTrader people on occasion will say, hey, I have different information. Or if I have NinjaTrader, people using TradeStation will complain, hey, mine's different. Well, let's all work on the same platform. And I'm giving you guys one that's not going to cost you a dime. How cool is that? Eric will dial you in. He'll set you up. All you have to do is go to my website, go to iTradeLogic.com, click on the index box, and look for that button right there that says click here. That will actually take you to a registration form that you fill out. Eric's going to get that. And when Eric gets that, he's going to give me a heads up that you've requested a trial. That's one way of doing it. The other option you have is you can contact me directly. Okay, call me directly. Phone number, email, it's all here for you. Phone number and email. Send me actually an email directly to ep@iTradeLogic, ep@iTradeLogic.com, and I'll dial you guys in with a 2-week trial to the Logic Center. Now, everybody's going to get an invitation to come into the Logic Center next week. So, throw it into your junk mail if you don't want to come. If you do want to come, that's on me. Okay, so you don't have to sign up for anything. Everybody's going to get an access pass next week. But if you get a 2-week trial set up and established, I'll give you the next complimentary webinar so you can continue the education process. If you make a purchase, any purchase of any membership package in the month of March, I'm going to kick in, and it just got cut off over here, didn't it? Session. There we go. I'm going to kick in a $200 value 1-hour coaching session for you. Just me and you. Nobody else. I can tell you right now, I usually spend that hour talking about you, talking about what's broken, and trying to develop a trading plan rather than going in and talking details on the technology. Because a lot of that can be done inside of the Logic Center. Save your dollars for that. Now, a lot of guys will actually do 1 coaching session a week, 1 coaching session a month. Everybody's different. But the good news is you have your options. If you guys go to the subscribe page, here's a big reason why I set up my company in my room. I want to make it affordable. Because if it's a lot of money, well, and you're not making money, that's no fun. So you got multiple options here, guys. The core ITL is somebody that just wants to be a bug on the wall. You want to come in, you're going to use your platform, and you just want to listen to me call out trades, identify spots, and just be a copycat. Knock yourself out. For $50 additional, the Premium ITL, which is the most popular, is going to give you access to the workshops. No access over here to the workshops. Access to the workshops, access to the Trader's Clock tool, access to the tutorial and e-file on my Turbo Scalp system. So if you like the scalping I'm doing in the room, this is not going to get it done for you on the left. You're going to get access to the video tutorial for the Turbo Scalp, the Trader's Clock, everything for $300 a month. Now guys, if you're not making money or having fun, enjoying it, getting it after what, 3 months time, is that going to break the bank? I don't think so. The platform is free. The education is, I mean, I can't make it a more affordable price. And you're not having to bite off $3,000, $4,000, $5,000 up front to find out 90 days later, oh boy, I still have the car going into the wall and I'm just not sure if this is for me. Trading is not for everybody, guys. It's not. Now, the quant, the actual levels, the technology. This is Joe Rios' technology. So if you want to have all of the indicators, the channels, the risk reward, the Gnostic levels, the accelerators, that's all Joe's technology. You can buy that outright. You can own that. Or, again, 2-3 months, try it. You're going to do it in a trial before you have to whip out $1. But again, do the math. Even with this tacked on, 90 days time, I can tell you for a fact, it's a huge saving, as much as 50%, compared to what the average package is for some of these professional packages, which are just garbage. And then this is an option. If you guys want some consulting, I have that available. And I just told you guys that I will kick that in, a freebie, for anybody that makes a purchase in the month of March. Okay? So that is available to you if you guys are interested. But you do have to make a purchase. You do just have to make a purchase for a package. Contact information. You guys can reach out to me directly, or you can reach out to Eric directly to get your trial going. Eric will dial you in. He is a broker with Index Futures Group. Again, I want to say thanks to the guys at IFG helping me sponsor and getting people here today. And you can contact me directly if you have any questions, comments, concerns on anything that you've seen today. And I hope to see you guys all in the Logic Center on Monday. As I said, I will send an invitation to everybody to come into the Logic Center on Monday. And you can hang out with me for the week. And then I'm also going to send the recording to those of you that showed up here today. I hope you guys enjoyed it. I hope you guys learned something. I hope it makes you want to try something different, change up your way, change up your action, and get on the right track. And I hope I can help you guys out. Guys, I want to say thanks for hanging out with me on a Saturday. Kept you guys right under 90 minutes, so I'm good to go. If you guys have any questions, comments, concerns, I'll stay back here for a little bit and answer those up. For those of you that are watching the recording, I hope you enjoyed it, and I'll see you guys real soon in the Logic Center.